Let's talk Triple Q versus Triple QM. If you're wondering what the M stands for, it means muy bien, mamacita. I have actually no idea what the M stands for, okay? We're not going to go over that in this video, but we are going to make sure that we figure out what the difference is because it might be interesting to you that there is a reason to have Triple Q over Triple QM, even though Triple QM is less money. But of course, most people are going to want to go with Triple QM probably. Let's talk about why. We're in the Charles Schwab Fund Analyzer tool. On the left side, we have Triple Q. On the right side, we got Triple QM. All right, so what do these track? Well, they track the Nasdaq 100. The Nasdaq 100 are the largest 100 companies based on market cap inside the Nasdaq. The Nasdaq has a lot of different stocks, way more than 100, but these are just the top 100 largest stocks inside the Nasdaq. Now, the first thing you have here is a different expense ratio, of course. So Triple Q has a 0.20 expense ratio, and then Triple QM has a 0.15% expense ratio. Why is this important? If you had invested $100,000 inside Triple Q and Triple QM, and you made 5% return on that money, and you waited 10 years, how much money would you have paid in fees on each of these? So Triple Q would have grown to $159,664. Triple QM would have grown to $160,464. Why do you have more money inside Triple QM? It's because of the expense ratio. The expense ratio has a bit of a drag inside the portfolio. It might not seem like a lot because it's like 0.05% different, but it ends up giving you more money if you invest in Triple QM. So as you can see, the amount that you pay in fees for Triple Q is $2,550.29. If you had invested instead inside Triple QM, you would have paid $1,917.88 in fees. It ends up being $633. So there's actually a decent reason to have Triple QM over Triple Q over time, and that's only 10 years. So imagine if you did a longer time period, you're going to save some money going with Triple QM. Now, there is a caveat here. Let me talk about that. So the thing is, Triple Q, it's a larger portfolio. It's got a lot more money in it, and it's got a lot more volume. More traders or more, let's say, institutional investors are using Triple Q than they are Triple QM. Triple Q has 147 billion in assets under management, and then Triple QM has 4.5 billion. So obviously Triple Q much bigger than Triple QM. Okay, so here's the next question. Why does it really matter? Well, the deal is there's more volume. So the volume in Triple Q was 66.8 million, and then the volume in Triple QM was 1.1 million, right? And so what this does is it actually gives you a tighter spread when you go with Triple Q. And so you do end up saving a little bit of money if you go with Triple Q in terms of the spread. So you can see the spread here, 7 cents for a spread for Triple Q. Well, if you went with Triple QM, I'm so tired of saying Triple Q and Triple QM. If you go with Triple QM though, we'll call it Triple Q muy bien, then you get 0.34% as 0.34%. 34 cents as the spread. So of course there is a little bit of a difference in the bid-ask spread. So if you have tons of money going into these, it might end up making sense if you're trading this. So if you're trading this, if you're buying Triple Q or Triple QM like often and you're day trading it, or if you just, let's say you just trade and you buy it often and you sell it often, well, the spread can end up adding up, right? So in that case, Triple Q can makes sense for some people. However, if you don't do that, well, Triple QM probably is going to end up making more sense, of course. Now, if you don't believe me on how close these are, well, take a look at the fund overlap, and you can see it's 100%. So they're the exact same funds. Literally, the only difference is, well, let's say how much money is in assets under management. Of course, they're both Invesco ETFs, so they're both the same fund company anyway. But how much in assets under management? So Triple Q has way more in assets than Triple QM. And the other thing, of course, is that bid-ask spread. And the big one is how much you pay in an expense ratio for these two, Triple QM being cheaper than Triple Q. The dividend yield, it's pretty much the same. 0.74% Triple Q, Triple QM, 0.72%. They're probably like the same. It's probably like rounding errors. I mean, they're pretty much the same. They both pay quarterly dividends, so you don't have to care about that if you're into dividends. Not that they pay a lot of dividends anyway, but if you do care about it, then there's that. And to even further show you how close these are, let's take a look at the top 10 holdings. I mean, you could see Apple is the top 10. You have Triple Q here on the left. You have Apple, 13.58%. Triple QM, 13.61%. Basically the same. I mean, honestly, like 3.0 0.3% difference, 0.03% difference, 3 basis points. Microsoft 10.48, 10.48, sorry, 10.46 for QQQ, 10.48 for Microsoft, 2 basis point different. Microsoft 6.97, 6.98, okay, like the same, right? Tesla's the same, Google's the same, Google Class A and Class C, I mean, they're the same, right? So the price to buy the ETFs is a little bit different, so you might actually care about that. So $270 for QQQ, and then $111 for QQQM. So, you know, you can, if you don't have a lot of money and it's really going to make a difference, well, it's, you know, over $100 more for QQQ than QQQM. So QQQM having a lower, let's say, price, you know, that might actually help you. So that's also a good thing. And I guess finally, I do want to mention that QQQ is actually a unit investment trust, which is, you know, QQQ is like one of the earliest types of ETFs, right? So the design was different, and it was not made, you know, unit investment trust is not going to be as efficient as what QQQM is, which open-ended investment company. But honestly, it's nuance. I mean, it probably doesn't really matter to you. It's just know it. But in general, like I said, QQQ, QQQM, same thing. You got a little bit of difference inside the expense ratio. You got a little bit of difference inside of the bid-ask spread. There you go. I mean, let me know in the comments which one you like, and hopefully you watch another video coming up on the end screen right now. And actually, also, disclaimer, thanks for watching.